The name of the strategy is the Elder's Impulse System. The Elder Impulse System is a strategy that is named after its creator, Alexander Elder. Dr. Alexander Elder is an American trader and author. His works on technical analysis are in high regard among the trading community. In his book titled Come Into My Trading Room, he revealed this system. So, first of all, I would like to credit the creator of this strategy. With that out of the way, let's understand the strategy. The strategy is based on the fundamental fact that the market moves in cycles. From time to time, any stock or asset will go from a period of high volatility to a period of low volatility. In a low volatility environment, we see small candles that lack any meaningful price movement. During such a phase, the value of the asset is seen as fair value and there is a balance established between buyers and sellers. These phases are not good for traders as they provide very less to no trading opportunities. Such low volatility periods are generally followed by periods of high volatility. During high volatility periods, we witness a strong move in one direction with high volumes. These moves can last anywhere from 3 to 7 days. In such phases, the market moves with momentum and conviction. There is an imbalance between buyers and sellers. As a momentum trader, these are the moves that we would like to capture. We want to enter when the momentum starts to rise and exit when the momentum falls. The impulse trading system will help us in trading these moves. For this system, we first need to plot the Elder's Impulse System indicator on our charts. The indicator is freely available on TradingView. Once you plot the indicator, your chart will look like this. I have switched to bar charts instead of candlesticks because the indicator looks better on bar charts. But it will work just fine on candles as well. Now, here we see that once we plot the indicator, we have 3 types of bars: red, blue, and green bars. The red bars indicate a bearish momentum, and the green bars indicate a bullish momentum. The blue bars are neutral and they indicate the lack of momentum. So the question is, how does the indicator determine the color of these bars? The impulse system uses 2 indicators to determine the color of the bars. They are a 13-period EMA and the MACD histogram. For a green bar to form, we need 2 conditions. First, the current value of the MACD histogram should be greater than the prior value. Second, the current value of the EMA should be greater than the prior EMA. In other words, we need a rise in EMA as well as MACD to color the bar green. Similarly, for a red bar, we need a fall in EMA and a fall in MACD histogram. And when the EMA and MACD give opposite signals, the bar color will be blue. If the EMA rises but the histogram falls, the bar will be colored blue. On the other hand, if the EMA falls but the histogram rises, the bar color will also be blue. Now let's dive deep into the rules of the strategy. The strategy has a very simple set of rules. The rules for buying are: Number 1, identifying an uptrend. Number 2, waiting for a couple of blue bars. And number 3, entering on a green bar. Let us now look at an example to understand the strategy. On this chart, we can see that the price is moving upwards. But to avoid any confusion, I have plotted a 50-period EMA to confirm the trend. As we can see, the price is trading above the 50 EMA and the EMA is sloped upwards. So we confirm this as an uptrend. In an uptrend, we are looking for buying opportunities only. For a buying opportunity, we will look for the formation of a couple of blue bars. By blue bars, I mean the neutral bars. We want at least 4 to 5 blue bars to identify a low volatility phase. 1 or 2 blue bars cannot be identified as a low volatility phase. On this chart we have these 5 blue bars, so we identify this area as a low volatility phase. According to the general market theory, we know that a low volatility phase is followed by a high volatility move. This means that we can expect the market to make a strong move. Since we are already in an uptrend, we will expect an up move. Now, for our entry, we simply need a green bar immediately after the set of blue bars. And as you can see, we get a green bar after this set of blue bars. This is our entry. We shall enter a buy trade at the close of this bar. We will keep our stop loss below the low of this bar and we will hold on to the trade until we see a blue or red bar. On this trade, we would have exited at the close of this bar as it was blue. As you can see, we made good profits. Subsequently, we see another set of blue bars. This shows that the market was in a low volatility phase. So we wait for a green bar to enter again. Here, we see a green bar appear after this set of blue bars, so we will enter a buy trade here as well. The following bar was blue and we had to exit the trade. We were break even on this trade. For the third time, we again witnessed the formation of these 5 blue bars. On the 6th bar, we have a high closing green bar. So we enter here. We exit on the occurrence of this blue bar for a profit. Now let's look at the rules of selling. Number 1, identify a downtrend. Number 2, wait for a couple of blue bars. Number 3, enter at a red bar. Let's look at an example to understand it. Here on this chart, we see that the price broke the 50 EMA and started trading below it. So, we will identify this as a downtrend. In a downtrend, we will be looking for sell trades. Now, we will wait for a set of blue bars to appear. In this particular example, we see these 4 blue bars and we identify this area as a low volatility area. Now we want to see a red bar appear immediately after the blue bars. Here is the red bar. So we will enter a sell trade here. We will keep our stop loss above the entry candle and we will exit after the occurrence of a blue or green bar. On this trade, the very next bar was blue, so we exited on this candle. This trade was a break-even trade. Then we see another set of blue bars form. This shows us that the price has been in a low volatility phase. Now again, we will wait for a red bar to enter a trade. Here, we see a red bar and we enter at the close. We will keep our stop loss above the high of our entry bar. And we will exit at a blue or green bar. We will keep the trade alive as long as we see red candles. On this trade, our exit came on this blue bar. And as you can see, we made profits on this trade. Then once again, we see a set of blue bars. We identify it as a low volatility phase. We wait for a red bar, and we enter on this bar. We keep our stop loss above the high of the entry bar, and we exit at this blue bar. Another profitable trade. So that was the Elder's Impulse system. The strategy is fairly simple, but it is also extremely profitable. The main reason for its profitability is that the losses are very small. As I always say, you should paper trade the strategy until you become extremely confident about it. That brings us to the end of this video.